Welcome to another episode of Learning Insights by All Cloud.
Currently the industry which is working in fashion is very offline.
How does that play out? Does it increase the stickiness of the borrowers or the consumers with you?
Or you say that I want to own but I want to keep the EMIs running.
The most interesting concept where the borrower doesn't have to pay the full EMI. He pays half of what typically he would have to pay to a bank.
People are now tending to upgrade their vehicle every 3 years, 4 years.
I think even lesser. There's
Even
so much
lesser.
choice in two-wheelers today that was not there 5 years back.
Right.
Alright guys, hi. Welcome to another episode of Learning Insights by All Cloud. Today, we're talking about commerce-enabled finance. This is a very nascent industry. How can we commoditize finance by making it available online and then combining both the physical and the digital journeys where you deliver a two-wheeler to your customer's home packaged together with a finance option? For that, I have today with me Harsh. Harsh is the co-founder of OTO Capital based in Bangalore. Harsh, welcome to Learning Insights by All Cloud. It's a pleasure meeting you here and initiating this conversation with you about commerce-enabled finance and what you guys are doing in terms of revolutionizing this two-wheeler financing industry.
Thanks, Rahul. Thanks for having me on this episode of Lending Insights by All Cloud. So basically, I'll just give a brief overview about Otto, what we are trying to do, and how are we enabling this commerce-enabled finance model to the consumers. So basically, we started with the lending industry where we plan to give affordable and flexible financing plans to the consumers, right? And within our journey, we realized that currently the industry which is working in a fashion is very offline, right? Where to buy a two-wheeler, consumer has to go to showroom for take a test ride. He has to visit 10 showrooms, right? Because let's say he do not know which vehicle to buy. Then he would go to first Honda showroom, TVS showroom, Suzuki showroom, and he would take test ride for 2, 3 bikes he wants to. He has shortlisted, right? And then once he decides which bike to buy, or once he narrows down to a one particular model, then he has to visit 2, 3 different showrooms of same brand to figure out the pricing of the vehicle,
To get the
right?
best deal.
Right, to get the best deal, and which is a 6 to 10 days process in itself, because nobody has so much time that he would visit multiple showrooms in one go, right? So, and hence we said ki we'll build a distribution model for this, where a customer can sitting at home decide which bike he wants to buy, and he can decide the mode of the purchase that he wants to do it, who is this vehicle with, right? Maybe it is cash or it is finance. So the journey of the customer on our platform typically looks like he visits our platform, he has all the information available on the platform to make his decision. For example, we have all the vehicles, we are OEM agnostic, so all the vehicles are available on the platform along with their specifications, their images, their
So they
reviews.
can mix match, see what works best for them.
Correct. So they can compare different bikes. They can read about the actual reviews of the user. So we already have 35,000 odd who have taken vehicle from us, right? So they can read the reviews of those vehicles. They can even schedule a test ride if they want to.
At their home.
At their home, yes. So we have partnered with all the dealerships across the city, and we facilitate those test rides at home if they want, and they can also visit showroom if they want for the test ride.
So basically, you're bringing the experience of buying a two-wheeler to the drawing room of the consumer,
True.
right? And then he just needs to go on the platform, select what he wants to see, compare, and then in this journey, he can also buy completely by paying upfront cash.
Correct.
That's one option. But then the interesting option is your finance model,
Right.
which may not be a typical finance model where the customer has to pay for the remaining balance out of his pocket. What you're doing is assuring a residual value or a buyback guarantee
Right.
at the end of a tenor. I think that's the most interesting concept where the borrower doesn't have to pay the full EMI. He pays half of what typically he would have to pay to a bank. How does that play out? Does it increase the stickiness of the borrowers or the consumers with you?
So I'll tell you where did this idea came from. So basically, what we have seen when we were starting this venture during our research, and obviously with our past experiences being co-founder Sumit, who was the founder of Credar as well, which is a used two-wheeler marketplace, and I was also co-team of the platform. So what we have seen is that the typical first-hand ownership of the vehicle which the users are buying is coming down with time. So earlier,
Okay.
if you talk about 10 years from now, people used to own the same vehicle for more than 5 years, 6 years, 7 years, right? But now with the millennial generation coming in, and with more and more technological advances happening in two-wheeler industry, people are now tending to upgrade their vehicle every 3 years, 4 years.
I think even lesser.
Right,
There's
even
so much
lesser.
choice in two-wheelers today that was not there 5 years back.
Right. So what we said that, okay, people are upgrading their vehicles fast. People are taking vehicles on finance, because if you see currently we talk about the industry, 60% of the two-wheelers which are purchased are on finance.
Correct.
So why can't we combine these two and build an interesting product for the consumers where they have the flexibility that, okay, I want to use this vehicle only for 2 years and I can upgrade at a later point of time. And they have an affordability where they are not paying for the complete value of the vehicle, because anyways their intention is to
So
use
you
it
said
for a lower amount of time, right? So what we did is that we identified the residual value of the vehicle at the start. So for example, if you are coming to Auto and you are saying that, okay, I want to buy Activa which is currently around a lakh rupees, and you want it for a 2-year plan. So what we do is that we estimate the value of this Activa today, that what would the
the
value
value
of
of 2 years
it
later.
after 2 years. So let's say we say it would be around 45,000,
Correct.
just a
Just a number.
hypothetical
Yeah.
number. But yeah, let's say if we say 45,000, then we would charge you only for the 55,000 rupees during your tenure. And at the end of 2 years, you would have an option that you want to return the vehicle back and walk away, upgrade to a new vehicle. You can. You don't have to go into hassle of identifying whom to sell this vehicle, what is the right price to sell this vehicle, making sure the paper transfer is done. All those hassles are gone. Second option that you have is that you want to own the vehicle, because when you purchased it you were not sure, but now you want to own this vehicle. You can pay one shot 45,000 rupees to us and can own the vehicle. Or you say that I want to own, but I want to keep the EMIs running.
You can extend the
You
finance.
can extend the financing and you can own the vehicle by paying EMIs for next 12 months or 18 months, whatever the plan suits you.
I think this kind of flexibility is very different in a traditional finance company, whether it's a bank or NBFC,
Correct.
to understand the residual value and then come up with what they are going to be collecting from the borrower today.
Correct.
Plus, then what happens at the end of tenure? These kind of questions need a lot of innovation. I think your algorithms may be tweened and tweaked in such a way that the assurity is given. And you're also, I mean, so confident on the product. That's why you are able to give that
Right. And
assured value.
I would say that our data also shows the same. We have been able to, so roughly around, we have sold somewhere close to 250, 300 odd vehicles, which have come back to us and we have made profit on those vehicles. So it's not that we have given any residual value and we have built the product. We have algorithms, we have data science models to predict the value of vehicles. So just to give some example, every vehicle in the second-hand market would have a different value. So for example, white colored Activa, 20,000 kilometers run in Bangalore, HSR layout will have a different value as compared to the same vehicle in Hyderabad, right? So
Wow.
we have that amount of data available with us, which our models are trained on to predict those residual values of the vehicle. And pricing algorithms and all our code generation systems for the financing plans take those inputs from the models, and then accordingly the plans are being built for the
I think that's a
customers.
quite enriched data. If you're able to say which color, which vehicle, in which locality vehicle is going to give you the price, I think that's an assurance that the borrower needs. It typically also, if you look at how Indian consumers think, is that they think of the value of the product today I'm buying and what it will be at the end of the term. Even if you look at a car, those cars sell, which can get you an assured
Correct.
resale value.
True.
Basically, if I'm paying the finance all through my tenure, typically the car that I'm going to sell will be like the down payment for the next purchase that I'm going to make, and it's going to be always the better purchase or the higher value purchase.
Correct.
I'm sure your leases also work the same way. That the borrower takes X category of vehicle today, but then when he moves to the next purchase, it will be X plus one.
Correct.
Keep
Correct.
coming back to you.
Correct.
So when your purchases or when your purchase of the vehicle and the finance assessment and everything is digital, there is no touch and feel with the borrowers typically, right? Now, when in traditional finance, also in a two-wheeler finance today, there are companies and banks that are meeting the borrower when they're purchasing the vehicle. And for collections also, they keep bumping into each other, right? They'll go and meet them. If there is a delay, they probably call them, reach out to their home and probably meet them to understand why there is a delay. But in your model, which is completely digital, how is this being maintained? Because, finance, giving out money is one thing, but collecting is a different ballgame altogether. And it needs some kind of a reminder, because if it's out of sight, it's out of mind. How do you do that? What's the mechanism that goes behind the scenes to make this work clock like?
Okay. So, see, ours is a complete digital process, as you mentioned, right? So, if I talk a typical journey of the customer, how it works is he comes to our platform, he sees bike, he applies for a loan, and his all the activity that he's doing on our platform is being recorded in our systems. Like
Okay.
even the single click that he's doing on a certain CTA is recorded, and we track till what point the customer did the journey, how much time did he took, and all those things, right? And once he completes this application, then obviously the credit assessment happens. happens. And to underwrite any customers, there are two major points that you take care of. One is the ability of the customer to pay, and second is the intent of the customer to pay,
Yes.
right? For intent, obviously there are standards in the market, like you pull a bureau record, you check the bureau history, and basis that you decide the intent of the customer. But what we have also done differently here is to check the intent of the customer is we have defined a true score of our own, because bureau scores are general for everyone. By everyone I mean your bureau score, let's say it is 750, it is same for a personal loan, same for a business loan, same for a two-wheeler loan, for a credit card, everyone, right? But ours is a secured asset, and we know that if we are able to recover 5 to 6 EMIs from a customer, and after that he is not able to pay, and we are able to recover the vehicle, we would be able to sell that vehicle in profit,
Correct.
and we would not make loss on
Because
those
his
vehicles.
equity on the vehicle is more than your principal outstanding.
Correct, correct. So we have defined a true score which works in sync with the behavior of our credit team. And that true score and the bureau score combination is what we use to identify the intent of the customer. Now, to get the ability of the customer, one is that for certain set of customers who are able to give their bank statement, we ask the bank statements, and using those bank statements, we calculate what is the average balance of those customers, what is the income of the customer, and all those things. Another thing which we also do is that to make the process faster and digital, we ask the user to upload a video of his current address proof. So for example, if he is living somewhere and he do not have the address proof of that place, he can just give us a small video where we would capture the location of the user while he's capturing the video, and we can cross check with the address that he has
He's
mentioned,
given.
and can approve him instantly.
So these various ways, I think what you're trying to say, enabling the ease as well.
Yeah, so there
Right.
is a complete credit engine which works, which have different APIs, like the verification APIs. We, if the customer is giving us PAN, then the PAN verification API. If customer is giving us electricity bill, then with consumer number we can fetch his address, current address.
Correct.
All those APIs run in a sequential manner, and they give an output to the credit team form of that these checks have passed, and then credit team takes the decision of approving and rejecting it. And at the same time, we have models built over our data which customer can be approved and which customer cannot be, basis the data that we have.
Okay.
Currently, that model is under testing phase, where we show the output to the credit team and then they take the decision. But yes, once we have greater confidence of the on the model, we would have no manual
Mhm.
intervention in underwriting of the
Is this
customer.
also hyper localized to tell that which area borrowers are better payers and which area borrowers are not better payers? I'm sure.
Yes, that is, but I would say that to get to that hyperlocal level, we would need certain more data in our models, for our models. But yes, at a city level, it is.
Yeah, so we're making people actually, across the city make better payments so that their cumulative and combined scores, are getting affected with auto if they want to take a vehicle with auto here.
Right.
So with this two-wheeler segment, and when you see the borrowers, right, how is the approach? Is there a recall they get with auto to come back and purchase or make another purchase? Is there, have you seen that they're referring this to people? Because now it's something which you're doing good, the customers talk about it, and that's where you get more business from. So is there something that's happening on these lines as well, where your customers are referring it to, their peers, their friends?
Yeah, definitely we have good customer referrals. I would say around 5 to 7% of our customers are coming from the referral channel, where people who have taken the loans from us and are happy with the product, they have referred customers to us. Another thing that which we have done is that for the existing customers, we have all identified that these customers typically take some short duration loans, maybe 10,000, 15,000, 20,000 loans from other digital lending apps as well,
Okay.
right? And what we have done is that since we know the prepayment behavior of the customer, because he's paying the EMIs to us on time, and we also know his POS outstanding against us and the value of the vehicle from our models, right? So we try and pitch the customers about a short period loan of 10,000, 15,000 in term of a top-up loan that we can give to the
Microcredit again.
microcredit, which we are giving to customers if he is willing to. And that again becomes secured for us, because we know that the vehicle value is greater than equal to combined value of my previous loan and my top up loan.
So it's like additional benefit they get.
Yes, and good thing for customers is that there is no process involved. It's just one click on the app and they can take the loan, because no KYC, nothing, everything is already there in the system, and it's at a very minimum interest rate, because for me also there is no CAC, there is no operational cost involved, right? So I can give that discount of rate of interest to the
Yeah, actually, it's
customers.
better, right? If a borrower keeps on building his relationship with one lender, there is confidence built on either sides. I
Right.
think that is what is required in this industry as well. That
Correct.
as much as a lender has the kind of confidence in the profiling and the credit assessment model, if it is repaid back by the borrowers in the same fashion, and it improves the overall experience for both the
True.
parties. So with two-wheelers, Harsh, I think the talk of the town or what will be happening in future is the electronic vehicles, the EV. I'm sure there is a significant or moving to a significant portion of your portfolio towards EV or the kind of request you're getting. And with EVs, there are multiple options of vehicles available, so many brands. There's so many startups working in the EV manufacturing today. And two-wheeler being the most progressive of all the lots. I think three-wheelers, four-wheelers, two-wheelers, and if you look larger vehicles also, two-wheelers has gained the most percentage. I think what last month was about 75,000 odd numbers getting registered across India. Where do you see this moving?
So obviously, see, vehicle is going to be future, and especially the fastest movement would be in two-wheeler segment
Yes.
only. We see is that in next 8 to 10 years, maybe by in this decade, by
2030 is
2030,
something that the
around
government has also
2030,
put a lot of milestones on
correct. So more than 60 to 70% of the vehicles would be the electric vehicles, which would be running on road,
on the two-wheeler side.
on the two-wheeler side, right? The fastest movement would be done by the last mile logistics companies, which are at the forefront today as well. Most of the companies who have a fleet of people who are doing last mile logistics, maybe it courier company or the Zeptos or the Zomatos,
Zomato of the
Swiggis of
world.
the town, they have a mandate to move their fleets to EV in next coming years, right? And they would be at the forefront of moving these vehicles, bringing the transformation to the EVs. But at the same time, individuals who are also looking for buying the vehicle, they are now considering vehicles, because of obviously the cost of running
Operational
the
cost.
vehicle is very low, and the infrastructure is also getting built. There are a lot of companies who are building the charging infrastructure. There are a lot of companies who are building the swappable battery
Correct.
systems. There are innovative insurance products being built on the
The EV
EV
side.
side, right?
Okay.
And that would give a lot of push to the ecosystem to move this transformation to EV ecosystem.
So I think everybody in this segment is trying to make sure that the vehicle is on the road and is being run, whether it is the government or the policymakers, whether it is the EV manufacturers themselves, battery manufacturers, and I think even the lenders, because ultimately, if the asset is being used, then it is paid for. And this is true more for the three-wheeler industry or in the commercial vehicles, but also for two-wheelers, because if I'm using the product every day and I'm actually using it, I'm enjoying it, then I tend to be more confident on it. With your model, where you're giving an assured value to the ICE vehicles today, you know, how does EV play out? Because there is no standard rule book today. There is nothing being, there's no legacy of data then where you can assure of a residual value to your borrowers. How do you come to that, and what do you think the overall this ecosystem should do? One, and is there any specific things that you expect from the policymakers and from the government in these lines and manufacturers as well?
So yeah, that's a tough one, because there is no data of the resale market for EVs as of today anywhere, right? Because
Correct.
there is
It's very
no,
nascent, right? It's just
right,
about
it's
2 years.
very
You're seeing that a
nascent.
lot of EVs are coming.
And estimating the residual value of the vehicle is not possible because the data is not there. So obviously we try and to be a little conservative on those sides. We try and estimate the residual value of the electric vehicle basis certain research amongst the customers that we have done, and talking to OEMs and other organizations to see what should be the residual value. But yes, we are a little conservative on that side to make sure that we are happy to give a certain amount to the customer if the
If there
vehicle
is a
fetches
surety
a,
to you as well.
if the vehicle
Like
fetches. So for example, I assure 30,000 to the customer, and if I'm able to fetch 40,000, I am happy to give him 10,000 to the customer. But if it is lower, then the company's risk is very high, right? So
correct.
from OEMs and the manufacturers, if we get a if we get a confidence of the buyback value that they can assure us, obviously this product becomes very lucrative for the customers, because today customers are also very thinking too much about whether this vehicle would last long or whether I would be able to sell this vehicle at the right price
Correct.
or
The
not. But if
confidence is required. I mean,
right,
it has to be pushed again and again.
correct, correct. If we have certain products, certain policies or certain products from the OEMs where they are giving certain buyback value of the vehicles, obviously the adoption would increase, and for our product also it would be quite lucrative. One good thing which has really come up in policy is that now governments have mandated two-wheeler batteries to have at least 20,000 charging cycles. Earlier it was 7 to 10,000.
Okay.
So this 20,000 charging cycles would ensure that the battery life is at least 6 years or so.
And then at least in the range of the finance tenure as well.
Correct. And in the range of any typical tenures in finance is 3 years, right? 2 years, 3 years. So that has given us a little extra confidence in terms of valuing the EVs, because if battery, obviously the main thing in the EV is battery only,
Correct.
right? And that's the higher cost as well in the EV, right?
Significant cost in the total
Significant
machine that is
cost.
an EV.
Correct. And if we have confidence on battery that okay, this battery is going to last 6 years, we would be better able to structure our product in terms of the residual value that we give. Yeah.
I think EV is very interesting space. A lot has to happen, and definitely the push has to come from everybody.
Right.
Like we've been doing a lot of conversations on EV, and I think it's a very forward-looking and I think a forward-thinking kind of a domain that everybody's talking about. And so we were also trying to do whatever we could do in terms of getting this EV financing, infrastructure, getting all the missing pieces together. A lot of data is required for EV, and more than an ICE vehicle, we will give you a very enriched data. Like
Yeah,
how many.
obviously data, you can have the complete access to the BMS of the battery,
Correct.
right? The battery is the heart of the vehicle for EVs.
EV.
So there is a lot of data which we are currently getting, but a lot of products have to be built over it to
Yeah.
get those insights
Correct. I'm sure
about the
it's an
vehicle.
evolution for them. It's just
Correct, correct.
started. It's a long way to go. Harsh, what lies ahead for Otto? I think this model that you guys have built is fantastic, and it is scaling. So, what's next, and where do we see Otto going?
Got it. Great. So if I recall my 5 years of journey with Otto, building this, what I realize now is that we have built the foundation solid, right?
Yeah.
Our lending models are in place and they are performing good. Our processes, our partnerships are in place. They are performing good. We have even OEM partnerships coming up where certain OEMs are asking us to promote their brands digitally to sell the vehicles, and they are happy to pay a subvention on their vehicles as well, right? So now the processes are set, the lending models are set, everything is set,
The
the
infra is set.
partnerships is set. Now it's more about scaling and scaling the business, right? And what I see is that we currently we are adding around 5,000 vehicles every month, and we are on the way to reach 1 lakh vehicle every month in next 2.5, 3 years of time. So by
Fantastic.
2025, you would see Otto in doing a lakh vehicles a month kind of number. And obviously, once we have that scale, reach that level where in around 50, 60 cities we are present, Otto becomes a brand name, then there can be natural extensions to a four-wheeler segment, or maybe at that time we can decide whether we want to go global or in other categories. But yes, that's the vision that we have, that we want to be in the top three financing players in the country, leading the commerce enabled finance experience for the customers.
Fantastic. It was superb discussing with you. I think these are very great insights that I have collected. I think the whole industry as well should learn a thing or two from Otto. How a traditional model can be tweaked to make it commerce enabled, and how customers, how you own the customer relationship. I think that's more important because you significantly reduce your customer acquisition cost and deliver significant value to your borrower as well. So I hope everybody who's tuned in to listen into Learning Insights by All Cloud made a note of a couple of points here. Till further, we'll come back again with more episodes, talking to more people. Signing off on this one. Look forward to seeing you next.